Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. The market isn't waiting around. S&P 500 is up 1.5% today. The VIX is down, as you would expect. We're below 23 for the index. It's actually below the front month future, so that's a sign that maybe the market's a little on some more stable ground as we speak. We'll see if that lasts. Now, I think a lot of traders are holding their breath on this rally. Monday is a very recent memory for the market. We had a big sell-off on Friday. Monday we had a big rally, and maybe some got offside and thought the all clear was blown, and we of course had a huge sell-off yesterday. So the market's in this range. I think the market needs to get out of this range to have a real all clear blown, and maybe people are cognizant of the fact that there's more Fed speak coming today. The beige book is coming out. The jobs number is Friday, so there still are catalysts that could cause this market to go lower. Now, speaking of Fed speak, that was really fascinating yesterday. The market sold off on some news that Powell said that taper could happen sooner, and the net result was a lot of commodities fell really strong. We saw oil stay really low, of course, so that's interesting. Maybe that's good for inflation expectations, could dampen that. Now, Powell just said that he could do it. He didn't actually do anything, so he could still taper slower, and of course the market likes that. Maybe that's one of the reactions today. But also we have interest rates which are down significantly over the past week. We're at 170 on the 10-year. We're down to 140 yesterday. We're up a little bit. We're at 145 right now on the 10 years. But anyway, that's a big move for interest rates, and of course big cap tech certainly likes that. A lot of other parts of the market like that too. So Powell was able to be a little bit hawkish, but also a little bit dovish, maybe threading the needle. I'm kind of surprised with all that. Now, with all the talk of inflation, we have corporate profits at the highest level since the 1950s. So they've been able to make money in spite of the inflation. That must mean that it's being passed on to the consumer. And we know the inflation is out there, and that is not a long-term recipe for success for the economy. Right now, we got a 5% GDP, zero interest rates. I think the writing's on the wall that interest rates need to go up. We'll see what that happens. Of course, we got a jobs report Friday. We'll see if people increase those expectations after that. Finally, of course, the VIX, like we're talking about, people are very interested in downside puts for the short term. Maybe people are looking forward to that Santa Claus rally finally getting underway. People are actively trading. Next week's 21 puts, 20,000 of those have traded. Right now, those are at 90 cents. So people are looking for downside in the short term in the VIX. For Equity Arm Investments, I'm Joe Tigay.